This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on June 13th, Friday the 13th, 2014. Our time is 8:44 in the morning Mountain. Radio show runs on your favorite radio stations. Also, the shows are archived on Harold's personal websites, HESradio.com, rarecoloreddiamonds.com. You can stream them there at your leisure. As well, we have a podcast through iTunes. Have iTunes on your portable device, iPad, iPod, iPhone, any portable device. We go where you do. Type in World Financial Report on Radio. You will find us there. You can subscribe to the podcast. It will come in every week, and you can listen to our show anytime you want. It was an interesting week. As Harold and I were talking about off the air, a lot of turmoil in Iraq, and no doubt we'll touch on that a little later in the show, but very chaotic geopolitically around the world. In our newsletter this week, Chart of the Week, Challenger job cuts soar 45%. Challenger, Gray, and Christmas. They keep track of job cuts. They soared 45%. Most layoffs since February of 2013. So you can see in the United States some serious problems when it comes to the economy. Also, a very interesting note, the World Bank came out this week and said, now is the time to prepare for the next crisis. Bad weather in the United States, the crisis in the Ukraine, rebalancing in China, and anticipated rate increases will hit global growth this year. In fact, the World Bank came out and cut global growth because of a bumpy start in 2014. The IMF sounding the global housing alarm. They're very concerned about housing prices in many countries around the world, including our own Canada. China's most famous ghost city. We've talked about that before. There was a feature on 60 Minutes. And Business Insider has an interesting article about the ghost cities. You can find that in our newsletter. Also, the Fed prepares to maintain a record balance sheet for years. All the money that they have obviously printed and purchased their bonds with is on the balance sheet of the Fed, $4.3 trillion. They plan on holding that for quite some time. The U.S. recorded a $130 billion budget deficit. U.S. pensions will be cash negative by 2016, meaning people will be pulling out more money than be putting back in. And half of parents are supporting their kids after college. Also, Detroit cutting off water to thousands unable to pay their bills. So it's a very interesting time in the world financially and geopolitically. And that's why, Harold, we say you need to have hard assets. You need to have diamonds. You need to have gold and silver in your portfolio, because here you have the World Bank coming out and saying we need to prepare now for the next crisis.
Well, that is a given, I'll tell you, Randy, because, again, things all over the world are starting to heat up. And, again, look at Iraq. The fact is that the U.S. went into Iraq, accomplished basically nothing, spent a fortune. A lot of people got killed, horrible situation. Never should have been there in the first place. And then left Iraq, and now Iraq is worse than what it was when the U.S. went in the first place. So that's turning out to be a hotbed. Look at what happened with oil this week. Oil prices have skyrocketed. On Thursday alone, the price of oil was up $1.50. It's up again today. We're over $1.06 in crude. And if this continues, along with what's happening in Syria, and now there's rumblings between Iran and Israel again, we could literally, this year, see the price of crude oil trading in the 115, 120 range. So we've always been bullish on oil. You know, I never really believed the reports that were coming out that were saying that we had such an overabundance of oil, because basically the shale up in the Dakotas is almost impossible to get out of there. So basically, there's no way in the world that the U.S. is going to be self-sufficient when it comes to oil, and the fact is that oil prices are going to go substantially higher, which is extremely inflationary. And then with the fact that food prices have increased so substantially, you're seeing increases in food all over the place. Those are the two most inflationary things: oil to drive and to heat your home and that type of thing, and obviously food. So there's no doubt in my mind that these markets are going to get back on track. When that's going to happen, that's the mystery. But basically, the gold market had a good week this week. It's back up to $1,275. Obviously not what we want to see, but it is a start. And the fact is that it's not only the Middle East that's having problems right now. There's major situations going on in Brazil with the World Cup and soon to be the Olympics. There's some serious crime going on in those areas. And again, read a major report this week that there's no way in the world that Israel is going to allow Iran to go any further than what they're going at this particular point. So the whole world appears to be in turmoil. And again, I know it's extremely confusing why the markets are not doing what they're supposed to be doing, but we know that those markets have been suppressed. It's like a coiled spring. There's no doubt in my mind, because I've held all of the metals and all the hard assets that I bought for this particular scenario, and I still believe that that scenario is intact and is still going to happen. The only difference between the bull market that we saw from 2000 up to 2011 and what's going to happen next is it's not going to be an orderly bull market. It's going to be more along the lines of 1980, where we get these gigantic spikes in the market, where you wake up in the morning and some key news has come out and you see the gold's up $100 or $200. You'll see silver up $1, $2, $3. You know, back in 1980 when we had a similar situation, the price of silver went up $30 in just a couple months. And that's what we believe is going to happen again. So please don't get discouraged, because, again, we're not trading gold and silver. We bought it for a specific reason, and it's a hedge against all the bad things that are now, going to start to happen again. And fundamentally, the whole world is in trouble financially. That story on ghost cities in China is absolutely astounding. I mean, you've got these entire cities that are 100% vacant. Nobody lives there. You talk about a miscalculation. And if that doesn't prove that governments can be so wrong that they can make these massive mistakes, and that's what China's doing. People think that the economy in China is so great. It's not. Their banks are in big trouble, and the real estate market is in huge trouble. And isn't that the same with every other country? That's what's happening in the U.S. But the U.S. just never learns. There's so much greed that goes on in the United States that look what's happening in real estate. The fact is that real estate prices are rising because they're making it rise. They've held off most of the foreclosed properties just to bring the price of real estate up. And where in the world are the people that lost their homes in the first place? How in the world did they ever get to buy a home again? There's a 7-year hiatus, when you lose your credit rating. So what's happening now in the United States is not the banks or the mortgage companies that are giving mortgages anymore. It's the individual builders. And that's where the craziness is, because, again, it's like jumping from the frying pan right back into the fire. So it's really only a matter of this point here of standing pat. Most of us have our investments intact at this point. We own our physical gold and silver. We own diamonds. We may own art or cars or things like that. But the fact is that we need to let the markets come to us, and the markets will eventually do that. I wish I could tell you the exact date that silver and gold are going to bottom out and these markets are going to reverse again. In order for that to happen, we need something strong to happen in the marketplace. We need something that is going to make the markets jump up and catch these short positions in the market, so they're going to have to scramble to buy back their positions. It's called short covering. And I've seen this happen many times before, and it is going to happen. I can feel it in this type of marketplace. Again, I've traded these markets for 35 years, and I've seen almost everything that has happened that is possibly to happen in the marketplace. And I definitely do compare this market to 1980. Again, when the bull market went from an orderly bull market, when silver went from $1.50 up to $20, it was very similar to the move that we saw in silver when silver in 2000 or 1999 went from under $4 and then eventually went all the way to $50. Now, what happened in 1980 was that there was so much gold and silver that was purchased in the futures market, which is where silver and gold was purchased, that people could get leverage and buy futures contracts. And being a futures trader at one time, I understand that market. And basically the way it works is when you buy a futures contract of silver, which is 5,000 ounces of silver, there has to be 5,000 ounces of silver sitting in the warehouses in New York to back up your futures contract. Because the people that trade in the commodities markets, part of them are speculators, and the other part of them are hedgers and producers that use the futures markets, for example, as a farmer. So if you're a farmer and you're growing soybeans, you're going to use the futures markets to hedge your crop. And that's what the futures market is actually meant for. But basically, if you're a producer or a hedger, you can take delivery of your commodity. So that's basically what we've been saying all this time, is that there was so much gold and silver that was purchased in 1980 in the futures market that they couldn't balance the books. There wasn't enough silver physically in the warehouses because they sold way too much gold and silver. So basically they closed the market for 2 days. And when they reopened the market, people got so spooked that they sold, and silver dropped $26 in 2 days. Isn't that almost identical to what happened in 2011 when there was so much gold and silver purchased because gold just hit 1,900, silver just hit 50. Everybody was talking about gold and silver. Everybody was bullish on it. The hedge funds were buying it, and so much gold and silver was purchased that there was not enough physical gold and silver to match the futures contracts and these ETF contracts, these exchange-traded funds. Instead of closing the markets for 2 days like they did in 1980, what they basically did is made it so expensive to trade gold and silver by raising the marginal requirements. It had the same effect. Gold dropped from 1,900 to 1,180. Silver dropped from $50 down to around $18. And then fell further from there. So basically, because they couldn't get their act together, because they couldn't do what they were supposed to do, which was balance the books, make sure that if this is how much silver is in the warehouse, that's how much silver can be sold. And once they went over that, then that's when they destroyed this market over the short term. So now we've been in a bear market for 3 years. The hedge funds that were in the market before had sold out because they made it so expensive for a futures contract that there was no more leverage, and it didn't make sense for them to trade it. So they looked at other markets, and that's where the hedge funds went to and all the speculators went to. And that's where we sit today. Now, with very few interested in gold and silver at this particular point, you know, it may sound strange, but that's a very bullish scenario because the marginal requirements have come back down. It's not so expensive to trade gold and silver anymore. You've got high oil prices, just like we had back in 2011 when oil went to 150. We had the potential of inflation, which we have again with high oil prices and high food prices up 20-25%. So basically, the market seems to being back technically or fundamentally to where it was. And now you've got nobody really looking at the gold and silver market. It's being traded very lightly. That's an excellent time to get into that market because basically when it's lightly traded, there's bargains in the market, and that's what we have right now. So you have to look personally at your own financial situation and say, do you believe that what's happening in the United States right now is real, or is it make-believe? My feeling is it's make-believe. There's no way in the world that people are working, and those that are working are not making the money that they made before, and you've got a stock market that is hitting records almost every day based on absolutely nothing. That, to me, is a recipe for disaster. So, most of my assets are sitting in diamonds and in gold and silver physically, and that's exactly where I feel comfortable with it. I have no stocks in the market. I have no bonds. I have no retirement savings plan. I don't believe in those because the fact is just look at your own retirement savings plan. How well has it done in the last 10 years? And the market's at record levels. So, again, those markets are not for everybody. I totally believe that we're going to see well over $50 in silver again, but it's going to be a big spike. We're going to see it over a shorter period of time. And again, you need to be in the market in order for that to happen. What's going to happen when gold and silver run again is you're going to get people running into the market and paying much higher prices than what we have right now. I know it takes guts to buy a market that nobody's talking about at this point, but again, in my experience, that is the market that you need to be in order to accomplish what you need to accomplish. If we're going to have high inflation and currency devaluation, you need to own gold, silver, and diamonds. It's been proven in history, and it will be proven again. So, Randy, I'm totally optimistic. Again, I get upset when I see the numbers come out and they can't be verified. I get upset when they come out with bogus unemployment numbers and other things like that. It just means that they're manipulating the markets, and that's what these markets are not supposed to be. This is a free country. You're supposed to be able to say whatever you want, and basically, as long as it's legal and moral and ethical, you can do what you want. And basically, by fixing the markets, that's not conducive to a proper market in a free country. So, again, buy physical gold and silver. Take physical delivery of your metal and own it outright. Keep it in your possession, and you're going to find within the foreseeable near future, you're going to be right on this trade, and you're not only going to hedge yourself against these horrible things that are coming our way, but you're going to make an awful lot of money. There is no doubt in my mind that gold, silver, and diamonds will make us rich moving forward, and those that are not in that market, that are sitting in stocks exclusively, are going to have a repeat of 2008, and that's the gospel. That's what I believe is going to happen.
To invest in precious metals, speak with Worldwide Precious Metals. Their website, www.pmc.com. Their telephone number, 1-866-623-2002. 1-866-623-2002. Their website, www.pmc.com. One of the items we have in our free weekly newsletter, and you can receive our newsletter going forward from Herald exclusively. Connect with Herald at rarecoloreddiamonds.com. The telephone number to connect with Herald as well, 1-800-432-1022, 1-800-432-1022, and rarecoloreddiamonds.com. We had an interesting article from King World News. Eric King interviewed Eric Sprott, and he also interviewed John Embry. And John Embry said this will bring the entire global Ponzi scheme to its knees. When you look at what is happening over in China with all the metals being basically rehypothecated and used to increase leverage in the Chinese shadow banking system, now they have found out that massive quantities of metal are missing. Despite the propaganda, this is not bearish for these metals. Instead, this is wildly bullish because it's just another acknowledgement of the incredible amount of paper that is being written against real assets. Why anyone would want to own any of this paper versus real assets is an absolute mystery to me. And I suspect that when the mystery is solved, those holding the actual hard assets will be the real winners, as Harold was just saying. The world is getting very close to the cliff's edge. I don't believe there's any vitality in any economy. Last Friday, U.S. investors and traders were anxiously awaiting phony job numbers that are so completely cooked that they could report anything they want. The birth-death model has been completely discredited, and yet that created half of the so-called jobs. Then there were temporary jobs, leisure jobs, etc. They are not wealth-creating jobs. This is just all garbage, and the U.S. economy is in deep trouble. He says, I don't think there's much time left. What will bring the entire Ponzi scheme to its knees will be the eventual acknowledgement of the weakness in the global economy. European Central Bank President Mario Draghi already confessed that the bank is going to have to do more and more obscene things with monetary policy. And at some point, this will lead to a loss of confidence in paper, and interest rates will soar. That will be the death knell for this financial system. I'm a huge believer in the Austrian economics, and when you go beyond a certain point of too much debt in the financial system, it's game over. Either the currency gets destroyed or the economy, or, in this case, both. He says, this is a very painful time for investors in gold and silver because they are victims of financial repression as the Western central banks desperately try to elevate paper assets and confidence is crumbling in the financial system. So he says, I am not debating the outcome. I know what the outcome is going to be, and this will be horrific. But as soon as the great illusion of the Western central planners is exposed, there will be a massive and historic wealth transfer to those positioned in hard assets, such as gold and silver, a wealth transfer unlike anything the world has ever seen. And Harold, very similar to your comments, John Embry saying that we don't know the exact date when these things are going to happen. We just know, as we have in the past and correctly called the financial crisis, gold going from $250 to $19.20, also silver going from $4 to $50. We don't know the exact date. We just know that some point in time, and we believe sooner than later, you'll want to have hard assets in your portfolio based on what Harold was saying and what John Embry was saying. And Harold, we have about 2 minutes left in our segment here.
Boy, time really flies by. It was how many years ago, Randy, that John Embry and I were the only ones talking about
2002.
silver and gold. So, it's almost gone full circle. And the fact is that we're not stupid people. John Embry is a brilliant man, and the members of GATA, many of them are brilliant. So these are not quacks. These are not people that, are just gold bulls and type of thing and never relent. These are people that are extremely intelligent, that do their homework, that understand what's going on, and are as frustrated as you and I are. So, again, these markets will have their time again. This is not wishful thinking. This is the gospel. This is going to happen because these are action-reaction type of markets, or at least they should be, and eventually these markets will get back on track. And I personally don't believe it's that far off. I don't think we're talking years. I think we're possibly could start to see this market start to turn around the end of this year.
To invest in precious metals, speak with Worldwide Precious Metals, their website, www.pmc.com. The telephone number, 1-866-623-2002. We have a free weekly newsletter. If you'd like to receive it, speak with Harold. Connect with him at rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, 1-800-432-1022. His website, rarecoloreddiamonds.com. And to invest in precious metals, www.pmc.com. The telephone number to connect with Worldwide Precious Metals, 1-866-623-2002. And it was a very interesting week in the markets. James Turk talked about the dollar, the U.S. dollar. And he said the U.S. dollar use in global commerce is in decline. Given that the dollar is almost the most over-owned asset in the history of the planet, any decline in its use in commerce can quickly turn into a collapse in demand worldwide. It is an outcome that would simply overwhelm central bank dollar purchases as they attempt to keep interest rates near zero. The swan dive by the dollar after the ECB announcement was just a tremor. The big quake is coming, and this one will eventually send gold and silver soaring, will at the same time send the dollar to the dumpster and perhaps even to the fiat currency graveyard. And that was after the EU came out and announced that they would have negative interest rates to fight off deflation in the EU. To invest in precious metals, speak with Worldwide Precious Metals. WWPMC.com is their website. Telephone number 1-866-623-2002. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on June 13th, 2014. Our time is 9:09 Mountain. Radio show runs on your favorite radio stations. Also, shows are archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Find us at World Financial Report on Radio. Harold does daily market commentary, too. You can find it on his website and on the podcast site as well. To invest in precious metals, gold, silver, platinum, palladium, speak with Worldwide Precious Metals. Their website is www.pmc.com. Their telephone number is 1-866-623-2002. Harold's website for diamonds is rarecoloreddiamonds.com, and you can speak personally and privately with Harold about diamonds at 1-800-432-1022, 1-800-432-1022. He has an auction site, hsfineauctions.com, and we will have more auctions coming up in the fall. Our featured diamond this week, it's internally flawless. It is absolutely spectacular, one of the most beautiful diamonds I've ever seen on a color perspective. It's a 1+ carat radiant cut fancy intense yellow green and just absolutely gorgeous. Speak with Harold. Go to rarecoloreddiamonds.com. Take a look at the click on Featured Diamond of the Week. You can take a look at it. We also have it in our newsletter. Get our free weekly newsletter from Harold. We'll be happy to send it out to you every week via email, free of charge. And one of the big events this week in the world of diamonds, a 5.5 carat oval pink diamond fetched $9.5 million at Christie's. It did very, very well at auction. The auction was in New York City, June 10, 2014, at Rockefeller Plaza, and the estimate on it was 6.5 to 7.5. It went for $9.5 million. Another interesting lot, Harold, was Lot 59, and it was a colored diamond ring set with a rectangular cut fancy light pink diamond weighing 5.91 carats. Now, the estimate on this, and this is a VS1 clarity, the estimate was $575,000 to $675,000. The price was $1.8 million.
Wow.
Sold for $1.8 million at auction. We have other auction results we can send out to you from this auction that took place during the week. But as you can see, pink diamonds continue to do very well at auction, which is no surprise to us, Harold.
No, it certainly is not. In fact, pink diamonds will continue to go up in value tremendously, and over the next 6 to 10 years will outperform pretty well any other asset, because the Argonne mine that produces 95% of all the pink diamonds is going to close in 6 years, and there will not be hardly any more pink diamonds. So, again, pink diamonds are amazing investments, and so are blue diamonds. Blue diamonds have skyrocketed. They've gone up about 1,000% in the past 10 years. And now to get a blue diamond is nearly impossible. When they do come up for auction, they sell for absolute fortunes. In fact, for those that don't believe that diamonds are a good investment, there was a diamond that sold a couple of weeks ago, a blue diamond, that it was originally sold in 1991 at Christie's auction house for $2.5 million. Fast forward 24 years to last week, where that same diamond sold for $17.5 million. So $2.5 million to $17.5 million over that period of time, in my opinion and many others, is a phenomenal return on your invested dollar. So blue diamonds are skyrocketing in price because of several reasons. Not only are they extremely rare and beautiful, but let's face it, the whole world is of concern right now. You don't know which currencies are going to be here. You don't know which dollar is going to be strong or weak anymore. You don't know what's going to happen with inflation or deflation, whether countries and banks are going to go bankrupt. Derivatives markets, all these scenarios, war breaking out in the Middle East again, extremely high oil prices, all these situations that are happening will affect the markets in some way, shape, or form. To own a diamond, an investment quality diamond, really puts you in a very unique situation, because these diamonds never decline in value. So in a world that we live in now where making money is so difficult in any marketplace, in real estate or stocks or commodities or whatever, you know, capital preservation is the most important thing, to be able to hold on to your money so you don't lose it back into the marketplace. That's why diamonds are such a great investment, because they don't lose their value. So you've got an asset that no matter what is happening in the marketplace, it's going to hold its value or go up in value. So you've got that situation where you've got capital preservation, it's going to hold its value, but you've also got a scenario where you've got capital appreciation, where these diamonds go up tremendously in value. And the longer and longer you hold them, the more and more they go up in value. Again, a 24-year-old diamond went from $2.5 to $17.5 million, and to me, that's a sizable return. A pink diamond that was purchased back in 2003, 10, 11 years ago, has gone from $350,000 to $4 million, $350,000 to $4 million. These are all amazing investments. However, how do you resell them? That's what we built. We have H. Siegel Fine Auctions. It's a virtual live auction business that we resell diamonds all over the world. We just had an auction for a major charity, the Susan G. Komen Breast Cancer Charity. It was one of the most successful events we've ever done, and we're going to do many, many more of them. You know, the summertime is here and many people on vacation and business slows down a bit. You know, so basically we will not have another auction till October, but because of the success of the auctions that we've had thus far, we will now start to do 2 or maybe 3 a month. We have other charities that are looking at us because of the success that we had with this breast cancer charity to do events for them also. So our business is growing tremendously. There's a lot of people around the world that are petrified about what's happening with their government, their currency, their investments, and things like that. And basically to take some money that's in another investment that may not be doing well, or, you know, like many of us feel the stock market could drop 50% this year. Later on in the year, we could see a massive drop in stocks. So if you've got all your money sitting in that market and that market drops, the chances are you'll never, ever make back your money again. So take some of that money that's at risk and put it into the type of investment, like an investment quality diamond, that over time is going to make you a fortune of money, but it's going to protect what you have. There's very few investments today that can give you what a diamond can give you, which is capital appreciation, and again, doesn't drop in value. There's no other market that you can trade in that gives you the safety that the rare diamond market gives you. Because again, you're talking about markets that trade on exchanges like stocks and commodities, where you have buyers and sellers that have different outlooks or different input to what the market is going to do. They have their own opinions. In the diamond market, it's a quiet, sensible market that is very conservative. It's not leveraged. You can't lose more than what you put in, and basically diamonds, investment quality, don't drop in value, and especially in the type of economy that we have right now. You know, the diamond that's a featured diamond this week is one of the rarest diamonds in the world. I highly doubt you will ever see another diamond that compares to that because of the color and the clarity. It's internally flawless. It's a yellow-green. Very seldom do you ever see a diamond of that caliber. And the fact is that diamond is a one-of-a-kind. Look at the video of it. It's candy apple green. It's the most beautiful color green that you could possibly imagine, and that diamond, investment-wise, will make a fortune over time. The other thing is that you should really also understand, if you are going to invest in diamonds, don't invest for the short term. You're not going to make any money. If you're buying a physical diamond for investment purposes, you want to hold on to that diamond for 10 or 20 years. That's where you're going to make your big money. If you buy a diamond today and look to sell it a year from now or 2 years from now, you're not going to make any money. You'll break even, but you won't make any money on it, and you defeated the purpose of the investment. So basically, if you are going to invest in rare color diamonds, buy them for the long term. If you don't need the money yourself, put them aside for your kids and grandkids, because that's where the biggest amounts of money will be made. You hold on to a diamond for 50 years, and you'll see returns that absolutely defy description. And if you're looking to hold the money, keep the money that you have, not lose it back into the marketplace like has happened so many times before, put some of that money into a rare diamond. I'm recommending Argyle Pinks as one of the best investments you could possibly make, because again, supply and demand. Demand is very high, supplies are low, the mine is going to close, no more pink diamonds, case closed. Prices go up 1,000%. Those that participated make a lot of money. Those that didn't participate are going to kick themselves because they knew in advance that this was going to happen. We've talked about it now for 10 years. So, again, one of the best investments you can make are pink diamonds, and the other ones are blues, and then yellow flawlesses and D-flawless whites. All of them at auction are doing way better than any other investments are. And, again, I couldn't be more proud of what we've built which is the Rare Colored Diamonds brand and trademark, and then on top of that, the only secondary market that exists in the world today that resells lower-priced diamonds, and that's our biggest contribution to the diamond business. Again, Randy, I really believe that with the world markets the way they are right now, there is not a better investment than Rare Colored Diamonds.
Well, we definitely agree with you. RareColoredDiamonds.com is the website, and you can speak personally and privately with Harold about diamonds, your financial situation, by calling him. He is more than happy to speak with you anytime. The telephone number, 1-800-432-1022, 1-800-432-1022. RareColoredDiamonds.com is the website. Harold's auction site is hsfineauctions.com, and we had an auction recently. We've had them over the past couple of years. If you'd like to go to the website, take a look at the past catalog, some of the items that we have auctioned off, do so. And we will let you know come the fall when we start up with our auctions again. But as Harold said, one of the most stunning, one of the most beautiful featured diamonds we have ever had. And this is an absolute beauty. This is one you definitely do not want to miss out on. You can go to the website rarecoloreddiamonds.com, click on the featured diamond of the week, and you will see a diamond that is 1+ carat, radiant cut, fancy intense, yellow-green, internally flawless. Absolutely stunning. One of the most beautiful diamonds we have ever featured. Also, we can send to you our free weekly newsletter. Top stories this week: a 5.5 carat oval pink diamond fetched $9.5 million at Christie's. As well, we touched on that other pink diamond that went for 3 times its original estimate of $575, went for $1.8 million. And there were other diamonds that did very well. In fact, there was a white diamond that really topped out. It was a 20-carat D-color VVS1, potentially internally flawless, rectangular cut diamond by Taffin that sold for $3 million. That was $153,000 per carat and within its estimate. If you'd like to see the auction results, get our stories from our free weekly newsletter. Connect with Harold at 1-800-432-1022 and rarecoloreddiamonds.com. One of the top stories from our newsletter this week, and I think it really does, it's something that maybe the average person, and I did touch on this at the top of the show, the average person may not quite understand how important this is. But Harold, U.S. pensions will be cash negative by 2016. That means Americans, their 401ks, similar to our RRSPs here in Canada, will be turning cash flow negative, threatening disruption for asset managers and selling of equities, according to Cerulli Associates, a research house. The $3.5 trillion system attracted fresh contributions of $300 billion in 2012 and $275 billion either withdrawn as cash by retirees or rolled over into individual retirement accounts, IRAs. And they go on to say by 2016, it forecasts the inflows will be $364 billion, the outflows $366 billion, with the deficit only widening year after year as the core of the baby boomer generation starts to retire. And that's something, Harold, when you take a look at the stock market, where is the new money going to come from? And I was reading quite a few articles this week where the sentiment towards the stock market is at an all-time high. A lot of the money is already in the stock market. We saw the stock market rolling over this week on many days. Where is the new money going to come from to propel it further? Because we know the young people in Generation Y are simply frightened of the stock market, don't want any money there because they learned during the financial crisis that's not the place to be. They're staying away from the stock market in huge droves. And yet at the same time, the baby boomers are going to start pulling money out. It's going to be an interesting phenomenon in the years to come to see what happens with the stock market. And that's why we still advocate having diamonds. Diamonds will be your savior when the stock market starts to roll over.
I believe what you're saying, Randy, is 100%. And I think that the stock market is going to lose its credibility, primarily because what's happened over the last few years is people just don't trust markets that are being fixed and manipulated. So, again, I agree 100% with you. And as far as I've always been concerned with the markets that we have at this point, is that the Dow eventually will get back down to the 5,600. Now, we did get to 6,500 in 2008, but still, that 5,600 level is a level that sticks in my mind as to where this market could easily go to. So, again, I don't see at this particular point that the small investor is going to get back into that marketplace. I just don't see where that's going to happen. They don't have the money and they don't have the confidence. And again, twice bitten, 3 times shy type of thing, because how many times does the general public get in on all the hype, like what's happening right now, only to find out that they're getting in at the end and they ended up losing all their money? So I just really don't like what I'm seeing in the markets at this point. The other thing that we really need to be concerned about is what's happening in the banks. Because what's happening in the banks right now is that you're starting to see that the banks are going to have negative equity, meaning that soon you're going to put your money into the bank and they're going to charge you because you're not going to get any interest. You're getting hardly any interest right now. And then on top of that, they're going to charge you for keeping your money in the bank, along with the fact that we know that if the bank closes down, you're going to lose whatever you had that's above the $125,000 insurance. So, again, putting your money in the bank is not a smart idea at this particular point. The fact is that a lot of the banks are very unstable, and one of the best places to have your money is in a hard asset like a diamond that nobody knows that you own, that cannot be confiscated or taken away from you. So, again, these are crazy times. It's so difficult to figure out what's really going on at this point because there's so much skullduggery happening in the world today, mostly with the governments, but I'm pretty comfortable with hard assets, and the fact is that history will certainly tell you that owning hard assets in an uncertain economy is one of the best investments you could make, and that's exactly what we've been telling our clients.
And if you look at the demographics going forward, one has to wonder what will happen with the stock market, what will propel it further, because eventually the Fed will not be the driving force. It can't be forever. One of the reasons it's doing so well is because of the quantitative easing, and they continue to unwind that as we speak. To invest in diamonds, speak with Harold personally and privately at rarecoloreddiamonds.com, 1-800-432-1022. For some people, they may have a hard time wrapping their head around investing in diamonds. It's not something they've heard of before, but Harold wrote an article back in 2005, Naturally Fancy Colored Diamonds, the Best Kept Secret. And since that time, the secret has been revealed by Harold via his website and through his auction site, hsfineauctions.com. And we're seeing clients, we're seeing auctions all around the world make record sales, and we're seeing people make lots of money. And if you'd like to look at starting your own diamond portfolio, now is the time to do it. We have our featured diamond of the week. It's a 1+ carat radiant cut, fancy intense, yellow, green, and it's internally flawless. One of the nicest, one of the greatest diamonds on this planet right now. You can see it at Harold's website, rarecoloreddiamonds.com. Click on Featured Diamond of the Week. And when you take a look at the diamond, you will see it's videoed, and we have a picture of it in our newsletter. And I really encourage you to get our free weekly newsletter from Harold. And when you see that video, you'll see a 360 of it, and you'll see it in all its spectacular form. But when it comes to investing in diamonds, Rare Colored Diamonds, the #1 website on the Internet for rare diamonds. And for this diamond here, Harold, I would say if somebody was looking to add to a portfolio, start a diamond portfolio, this would be an excellent core holding for many, many years.
You're right, Randy, and most collectors would never have a diamond that color, size, or clarity. So for serious collectors out there, that is a diamond that you definitely want to own and you will not see on the marketplace. So, again, just a phenomenal diamond. Love what's happening at with diamonds at auction. They're selling for way more than what the estimates are. Again, we're getting into a time when things are heating up again in the Middle East. You're going to have currency wars. You've got oil prices skyrocketing. We are over almost $107 in oil as we speak. We could see 125, 130 if things really heat up in the oil market in the Middle East. And again, the markets that will respond to that will be gold, silver, and diamonds. In 1980, when gold and silver hit the record levels, certain diamonds went up 500% those 2 years. So, again, I believe we're in the right place at the right time, and we just have to sit back and wait for the markets to come back to us. But, again, it's an excellent time to get into metals and diamonds at this particular time.
And one of the things that I touched on earlier, Harold, for some people, they're just used to investing in real estate or bonds or the stock market, maybe gold and silver. And yet the idea of investing in diamonds is quite exotic. But the truth of the matter is the wealthy of the world have been investing in diamonds for hundreds and hundreds of years. You have some of the wealthiest families in the world with some of the most incredible diamonds stashed away. And then you have people like Liz Taylor, who had one of the most incredible diamond collections on the planet, due to all her marriages and guys trying to obviously covet her, and they would be happy to give her diamonds. But Liz Taylor was an amazing collector, and there are people all over the world with diamond portfolios collecting diamonds today as we've never seen it before. Bain & Company did a report, and this was about a year ago, and one of the things that came out of the Bain & Company report was that the Far East, India and China, is going to be a massive growing market for diamonds. Yet at the same time, there are no new mines for diamonds being found. So you have more people coveting the diamonds, being interested in acquiring them in India and China, and yet the supply is just not there. In China and India, they're really making a push now for engagement rings. That's something that has not happened in the past. When people went to get married, you didn't have an engagement ring. But as the world has become more globalized, people are obviously looking at what happens in Europe and North America, and in India and China, they're starting to use engagement rings. And you're seeing huge investment out of the Far East. When we have our auctions in the Far East with Christie's and Sotheby's, you see the numbers, you see the interest that's there, and there's big money in China. There was a report this week that came out that the world's wealth has increased without a doubt. In fact, a lot of it has come from China. There are more billionaires and multimillionaires being made every day in China, and that's why we're seeing, Harold, this market really, really take off as they are coveting the rare, the unique, and the priceless.
You bet. And that's what we're out to do also, is to make our company international, worldwide, you know, and the pursuit of high net worth clients that can afford to buy these type of diamonds. So, again, we've been very successful at that. At our last auction, we had clients from Kuala Lumpur, from China, Australia, England, United States, and Canada. So we're definitely international, and it's just growing and growing. So, again, the worse the world economy gets, the more the currency markets get in trouble, the more inflation that's coming our way, you're definitely going to see that our recommendation on diamonds will be one of the best investments you've ever made. And, again, I've never been more excited about a market than I am in diamonds.
Well, Greg Hunter, who was formerly with CNN, interviewed investor Andy Hoffman this week, and he said negative interest rates in the Euroland, which happened last week, signal the final currency war. And that's what you're having right now around the world. Countries don't want a stronger currency, and you're into a scenario of everyone debasing their currency. As a result, we are all being affected through financial repression, and our money is becoming worth less and less. That's why the rich are putting money into hard assets like diamonds. As we've said before on our show, invest in what they cannot print. You cannot print diamonds. You cannot print gold and silver. You can print U.S. dollars, and that's the main concern. You can print dollars in any denomination, any currency around the world, and on a printing press forever. But you cannot print diamonds. Harold, with about 30 seconds left here.
Again, very, very excited. Anybody who wants to see the auction results, get in touch with us. We'll send them to you. Any charts or anything on gold and silver, we'll send it to you. I want to take this opportunity to wish all the fathers out there a very happy Father's Day weekend. We certainly deserve it, and I wish everybody a profitable day.
Thank you very much, Harold Siegel. Yes, happy Father's Day to all the fathers out there. To invest in gold and silver, connect with Worldwide Precious Metals, www.pmc.com. Their telephone number, 1-866-623-2002. Speak with Harold personally and privately about diamonds. RareColoredDiamonds.com, 1-800-432-1022. If you get a chance, take a look at his auction site, hsfineauctions.com. That will come in handy later on this fall. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.